and it is going to be all about technology. Meta, Microsoft, Tesla set to report earnings in just a few moments' time. IBM, Lam Research, ServiceNow, further down the market cap spectrum, the big market moves just up ahead. Carol, what do you keep an eye on?
Well, how quickly our focus changes from one big thing like that Fed decision and Fed press conference, right? And I feel like, okay, market's kind of in a cool space that they're kind of where they were before the Fed decision. Having said that, you are right, Romaine. It's all about what we get from these big tech companies. And in particular, that AI spend, there's going to be a lot of questions on that front, considering the news this week.
Yeah, and look, Bloomberg News reporting earlier today that Trump administration officials are considering expanding those restrictions on NVIDIA chip sales. We saw the entire market move as a result of that, and NVIDIA fall close to 7% as a result of that. This is on everybody's mind right now, especially on those investors who are watching these companies report today. A lot of questions about CapEx, I'm sure.
Yeah, but I wonder how much a stock like Tesla is really going to move on the results, because it's so far divorced, the share price action, from the number of cars it actually sells these days, right? I mean, it's all about Elon Musk and his political influence at this point.
Has it become a meme stock trade? And how long has it been the case? Ultimately, I think what's going to be really interesting is what dictates trade, whether it's more of a Microsoft and the heavy market capitalization, whether it's Meta and the ripple effects across other social media related stocks. But remember, he just said 65 billion. He's going to stick to it.
All right, Tesla down here in the cash session, down about 2%. Apple and Meta, the only two of the Mag 7 stocks in the green as we await those earnings. Red across the screen on the headline indices, a Dow down 0.3%, an S&P down 0.5%. The NASDAQ composite down 0.5% as well. The NASDAQ 100 down 0.2%, and the Russell 2000, Carol, down 0.2%.
Indeed. And as I said, I really do think it's important that, we went through some kind of roundabout moves coming off of the Fed decision, the Fed presser, but again, kind of finishing the day where we started just before that Fed decision.
Okay, a quick glance at how the sectors performed on the day. You have 7 sectors in the red, real estate investment trusts and tech each down by at least 1%. On the flip side, communication service, staples and utilities are higher.
All right, let's get to some of the individual gainers as we wait a big bunch of earnings. I got a tech one for you guys. ASML Holdings. This is a top gainer in the NASDAQ 100, up about 4% here, surging the most since 2020 over in Amsterdam.
All right, I'm going to interrupt you.
Yeah,
Microsoft earnings crossing the wire right now. On the top line, revenue $69.6 billion. Street looking for 68.9. Cloud revenue at 40.9. Street looking for 41.8. We should also point out EPS coming in at $3.23 a share on the Azure side. We're looking at that and cloud revenue services here. Revenue ex-FCX up about 31%. Caroline, excuse me. Going to get these two confused today. What jumps out at you?
The comments coming from Satya. We are innovating across our tech stack, helping customers unlock the full ROI of AI. We want to hear the return on investment, because that is where we're questioning. Azure not growing as quickly as had been anticipated, slightly dialing back from the previous quarter. This is where they offer their OpenAI integrated services, Tim. And we are seeing at the moment, hearing them speaking the lingo. They talk about their balancing operational discipline with continued investments in our cloud and AI infrastructure. I wonder if they put disciplined in that sort of marketing speak quite recently.
No, shares down right now by about 4%. Worth repeating some of these headlines. Second quarter revenue coming in above estimates, or we could say meeting estimates. $69.6 billion, estimates for $68.92 billion. Second quarter Azure revenue coming in just shy of estimates at 31%. Second quarter cloud revenue missing estimates. That seems to be what investors not so happy about.
Yeah, I guess the big question here is we know that they've already committed about $80 billion in CapEx for this fiscal year. The question is how it's going to allocate that spending, whether it's going to continue being on hardware or, as some analysts suggest, maybe to inference workloads, given the success of the Chinese startup DeepSeek.
All right, again, we're continuing to see Microsoft in terms of the after hours here, down about 5.25%. And again, I'm going to go through the big AI spend and what we get. Azure, as you said, second quarter Azure revenue up 31%. That's just about in line, maybe a hair lighter than what the street was expecting. Also, another headline from Microsoft saying AI surpassed annual revenue run rate of about $13 billion. But it's going to be a lot of questions about AI, certainly on the call today.
That was 175% year on year. It just speaks to how far we've come, but how much is already priced into a company like Microsoft, how much we're looking at the underlying earnings growth and whether it can be vindicated if OpenAI, though, suddenly starts to become forced to become cheaper and cheaper. Actually, that's going to speak to Microsoft's business model in the longer term. If generative AI has to rush to the bottom in terms of pricing, well, suddenly a business model becomes clear if they're able to arguably price it at a lower point to us and sell yet further and further products.
The question is, how comfortable are investors going to be with that spend as we keep an eye on Microsoft and their earnings? Western Digital, of course, big memory maker, moving lower in the after-hours trade, a beat on several key metrics here, but weakness on the gross margin level. And it kind of puts us into perspective here, what is right now going to be a broader conversation about spending in the tech space, spending that we should point out, at least I thought, investors were already somewhat uncomfortable with heading into this week.
We thought they were uncomfortable, and then we saw what Meta stock did on Friday after that announcement from Mark Zuckerberg. Did everything change on Monday when the market finally reacted to DeepSeek? I mean, we knew about DeepSeek last week. We knew about DeepSeek weeks ago. We didn't know about R1. That was recent. But this shouldn't be news to the folks at these companies.
One thing we should mention, Amazon, which does not report earnings today, is following Microsoft shares lower. And of course, Amazon, a big player here in the cloud space as well. Tesla earnings have just crossed, so let's get to that. Tesla saying that fourth quarter adjusted EPS was 73 cents. The consensus estimate was for 75 cents. And there's a headline here as well that there was less cost reduction than previously expected. Once again, fourth quarter EPS trailing the consensus estimates by 2 cents and less cost reduction than previously expected. Revenue, $25.71 billion. That is shy of the consensus estimate of $27.2 billion. And free cash flow, Caroline, $2.03 billion. Analysts were looking for $1.75 billion. But does this matter at the end of the day for the stock?
Well, does less cost reduction speak to a lack of efficiency that's going on from the man who's helming efficiency? I say that with a host of irony. But look, this is
my first thought.
Well, I mean, there is an element here that this is a company that we knew was seeing difficult deliveries in the fourth quarter. It underwhelmed, and still the market went up and to the right in its share price. People don't care about ultimately the fundamentals, so we'll have to see how the market is reacting. We're dropping by 3% after the fourth quarter adjusted earnings per share did miss. They expect Cybertruck eligible for an IRA consumer lift there. So interesting that they're still talking about tax credits coming for certain of their cars when this is something that's clearly being talked about with the now Trump presidency. Achieved record deliveries in China, and China's going to be a key point, Romaine.
And I just want to point out, too, gross margins coming in slightly below estimates, 16.3% versus 18.9%. And that operating income number, which we should put into perspective here, $1.58 billion. The street was looking for $2.68 billion. So a big miss on the bottom line, Carol.
Yeah, no, and another headline, the Cybercab scheduled volume production starting in 2026. Remember, earlier today on X, they talked a little bit about autonomous vehicles navigating from the factory to designated loading dock lanes without human involvement. They said one step closer to large-scale, unsupervised, full-scale driving or full FSD. And so there's a lot of things that are at play here that people want to know about: new products, new developments, what continues to kind of move the revenue line and the revenue growth line.
Well, the folks who are bullish on Tesla think that full self-driving will be a key part of that. The company's saying that this year will be seminal in Tesla's history as supervised full self-driving continues to rapidly improve with the aim of ultimately exceeding human levels of safety. It'll eventually unlock an unsupervised FSD option for our customers and the robotaxi business, which we expect to begin launching later this year in parts of the U.S. The big question is, what do federal regulations look like around that? And where and when can Tesla actually do this?
All right, Tesla down about 5% here in the aftermarket. Microsoft also, it is down about 3.5%. Lam Research just out with some results, and it's up almost 5% in the aftermarket. So a lot of earnings coming here. All right, guys, that's going to do it. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. Continue to watch us across the board because we're going to continue to break down these earnings as they continue to come out.